Jana Holdings to sell 7% stake in Jana SFB and exit promoter status following NCD downgrade. Synopsis: A rating downgrade to default status at its parent entity has pushed the promoter of a Bengaluru-based small finance bank to sell down another 7% stake, a move meant to repay Rs 700 crore owed to TPG Asia and formally exit the promoter category altogether. A structural shift at the ownership level brought a small finance bank into focus this week, though the bank itself insists its day-to-day business remains untouched. Jana Holdings Limited, the promoter entity controlled by Jana Capital, plans to sell approximately 7% of its stake in Jana Small Finance Bank to repay debt owed to private equity firm TPG Asia, a move that will push its holding below the 10% threshold and trigger reclassification from promoter to public shareholder. With a market capitalization of Rs 5,026.87 crore, the shares of Jana Small Finance Bank Limited were trading at Rs 477.15 per share, up 1.99% from its previous closing price of Rs 467.85 apiece. The stock is trading at a PE of approximately 15 times trailing earnings, near the middle of its 52-week range of Rs 330 to Rs 518.80. Stake sale update. Jana Holdings has been paring its position in the bank for over a year, and this latest sale continues a well-worn pattern. The entity held roughly 44% of Jana SFB at one point, by March 31, 2026, that had fallen to 21.85%, and Screener's shareholding data confirms promoter holding has declined every single quarter since March 2024. In April, Jana Holdings sold a 4.9% stake to TVS Motor Company for Rs 193 crore, bringing ownership to roughly 16.9%. The next 7% tranche will take the promoter below the RBI's 9.99% threshold, at which point Jana SFB can formally ask the regulator to reclassify Jana Holdings out of the promoter category entirely. TPG Asia, which already holds an 8.11% direct stake in the bank per shareholding disclosures, extended the maturity of its loan to Jana Holdings by 6 months on June 30 specifically to allow this transaction to close, and sources suggest a merger between Jana SFB and a peer bank is also being evaluated, though nothing has been confirmed through an exchange filing yet. Why the urgency? The stake sale is not a routine capital structure cleanup. It follows a hard deadline miss. Jana Holdings and Jana Capital failed to repay bondholders by June 30 and needed debenture holders, principally TPG Asia, to agree to push the maturity of the rated non-convertible debentures to December 31, 2026. India Ratings treated that extension as a distressed debt exchange and downgraded close to Rs 1,831 crore of cumulative NCDs at the two parent entities to INDD, its default category, from INDBB stable previously. The broader debt load sitting across these non-operating parent entities runs to roughly Rs 4,200 crore, a scale that dwarfs the Rs 700 crore this particular stake sale is meant to address, which tells retail investors that this single transaction resolves one slice of a considerably larger liability, not the whole problem. What this means for the bank? Jana SFB has told the exchanges it is neither a borrower, guarantor, nor obligor for any of its parent company's debt, and its deposits, liquidity, and lending operations are structurally ring-fenced from what is happening one level up in the ownership chain. That separation is real and worth taking at face value. A bank's balance sheet and a holding company's NCDs are legally distinct instruments. But the market has not treated the two as fully unconnected either. India Ratings placed Jana SFB's own NCDs and fixed deposits on a rating watch with negative implications following the parent downgrade, and the bank's ambition to convert into a full universal commercial bank, an application the RBI already returned once last year over eligibility mismatches, is now less likely to move forward while promoter-level distress remains in the headlines. The underlying numbers add useful context here. Jana SFB's financing margin, essentially net interest income as a share of interest income, has been shrinking, -5% in FY25, -13% in FY26, and as steep as -17% in the December 2025 quarter alone. Quarterly net profit for that same December quarter fell to just Rs 10 crore against Rs 111 crore a year earlier, before recovering to Rs 140 crore in the March 2026 quarter. Return on equity has come down from 26% in FY24 to 8% in FY26. Asset quality has actually held up reasonably well, with gross NPA improving to 2.46% and net NPA steady near 0.92%, so this is a margin and cost of capital story rather than a credit quality collapse, at least so far. A negative ratings watch on the bank's own paper, however, can itself raise funding costs if it persists, which is the channel through which parent-level stress could eventually touch the bank's numbers even without any direct legal liability. Business overview. Incorporated in 2006 and converted into a small finance bank in 2018, Jana SFB operates 816 banking outlets across 23 states and 2 union territories, serving 4.3 million active customers. It was listed in February 2024 through a Rs 570 crore IPO. For the March 2026 quarter, the bank reported consolidated revenue of Rs 1,445 crore and net profit of Rs 140 crore, with full-year FY26 profit of Rs 326 crore, down from Rs 501 crore in FY25. Disclaimer: this article provides stock market news for informational purposes only and should not be construed as investment advice. Readers are encouraged to consult with a qualified financial advisor before making any investment decisions.